This is Counting Macros from the Open Market Operation. It is Friday, July 10th, and we're looking back on the week in terms of data releases. It was a relatively quiet week. Let's just take a brief overview of sort of the data that we got. On Monday, we got the U.S. Services PMI. No data drop on Tuesday. Wednesday, we got monthly wholesale trade. Consumer credit came in below forecast. We'll get into that. Thursday, we got weekly jobless claims, and we got existing home sales. I guess first thing, we start in chronological order. Monday, we got U.S. Services PMI. The headline thing is that new business intakes has sort of increased at the strongest rate since February. Operating expenses have risen at softer but elevated pace, and confidence has picked up to a 4-month high. As far as further details, domestic demand remains the main driver. Overall, new export business has declined for the 7th consecutive month, which the S&P largely pegs to uncertainty around government policy and tariffs, quoting historically muted business conditions, which they sort of characterize by higher overall input costs, higher operating costs, etc. This has discouraged hiring as well, but respondents to the survey show optimism for the coming year. As far as the ISM report on business services PMI, it's 53.5% in June, which is 0.7 percentage points lower than in May. It's good to note that any reading for the services PMI over 50 shows month-over-month growth, and for the ISM report, any PMI over 47.5 generally indicates an expansion of the overall economy. As far as what respondents were saying to the ISM survey, they largely pointed to the conflict in Iran impacting pricing of raw materials across categories, and uncertainty around policy and global trade, higher interest rates, and elevated inflation, etc. So generally the same forces that have been defining the sort of economic landscape for a while now, for the better half of this year. As far as monthly wholesale trade goes, sales and inventories increased by 3.4% and 0.1% respectively. No glaring signs given sales increases and inventory increases. The only thing is that inventories only increased by 0.1%. I'm not sure if that slowdown in inventory accumulation is a safeguard against maybe a reduction in downstream demand later on due to certain sort of pressures, or due to potential supply chain issues with the war in Iran. Obviously, this data came from May 2026, and just recently the ceasefire ended. So I imagine a lot of these forces will remain in play. Consumer credit in May, I think this is the big story from this week, really missing the market forecast, 16.9 billion, and in fact decreased by 180 million. It's important to note also that in April, consumer credit increased by 20.82 billion, which is a stark contrast from this data that we just got for May. I want to interpret consumer credit as a metric loosely as a proxy to consumer confidence. I think this shows a shift maybe in consumer behavior, probably just in the face of, again, this sort of heightened uncertainty with the conflict of the Middle East, and also just generally fluctuating economic conditions. And people, I think, are sort of trying to either weather the storm or be patient in terms of how much they're taking on with the sort of persistent elevated inflation, as well as the interest rates that are going to go along with that. As for Thursday, weekly jobless claims, 215,000, again, 3K short of the forecast, equaling that of last week. This shows signs of the labor market sort of maybe cooling, finding a stable footing. We recently got weak non-farm payroll data showing that hiring has slowed as well. And this sort of cooling in the jobless claims shows maybe there's been a lack of firing too in what's been sort of called a low hire environment. I think it's also important to note that our last unemployment data release showed that it ticked down to 4.2%. I think demonstrated that this came as a result of people altogether leaving the labor force, not necessarily people being able to find new work. So I think this has sort of continued a trend that we've seen since the beginning of the year, where there may be some matching inefficiencies in the job market, or people are discouraged to enter the labor force or remain in the labor force and end up leaving. And that's sort of changing the headline numbers in a way that doesn't, fully tell the story. We also got existing home sales, 4.1 million. Important things to note. Median home price has reached an all-time high. But the NAR chief economist, Dr. Lawrence Yunes, points to the fact that wage growth seems to be outpacing home price growth for the time being. This could be sort of a short-run phenomenon, though, obviously, as without sufficient inventory of homes, home prices are just going to accelerate. Dr. Yun also suggests that strong job gains, over 500,000 since the beginning of the year, is going to provide support for the housing market, and says that the sort of monthly fluctuations in sales activity that we're seeing demonstrate the sensitivity of home buyers to affordability conditions, which is largely being driven by mortgage rates. And to my knowledge, mortgage rates are largely pegged to the 10-year. So again, environment that we're in, largely being dictated by this persistent elevated inflation being caused by a multitude of factors, which we've already discussed. And I imagine that these fluctuations will continue until we see some sort of semblance of normalcy return. I think primarily with inflation being reined in, Fed officials sort of point to core inflation remaining largely unchanged through the end of this year, but hopefully total inflation should sort of tick down as retail gas prices decrease, hopefully with the end of the conflict in the Middle East. But again, now with the resumption of the conflict, not sure how likely that is. That's it for sort of this week's data drop. Again, if you want to look at the Fed FOMC minutes summary and commentary, that's already available on the Open Market Operation website. Thank you for listening. Be on the lookout for more.